India's building boom needs one thing more than almost anything else: wire and cable. And three listed giants dominate that story: Polycab, KEI Industries, and RR Kabel. In this video, we break down all three: the fundamentals, the technicals, and how they stack up against each other. By the end, you'll know exactly what separates the market leader from the fast mover and the quiet compounder. Let's get into it. First, why this sector is on fire. India's cables and wires market is worth roughly 80,000 crore rupees today, and it's projected to hit 1.3 lakh crore by financial year 29. That's growth at about twice the pace of GDP. The real engine is the shift from unorganized local players to branded ones. Organized share has climbed to 74% and is heading toward 80% by FY27. But there is a new twist. Heavyweights Ultratech and Adani are entering the space, with Ultratech's Gujarat plant expected around December 2026. More competition, but a much bigger pie. One near-term headwind to note: copper, aluminium and PVC prices have all jumped, squeezing margins. So meet our three contenders. Polycab is the undisputed heavyweight, a 1.45 lakh crore market cap and a commanding lead. KEI Industries sits in the middle at around 52,000 crore, debt-free and a favorite of mutual funds. And RR Kabel is the nimble challenger at roughly 27,000 crore, but it's been the hottest performer of the three, up about 78% in a year. Let's take them one at a time. Let's start with the king. Polycab controls 26 to 27% of the organized market, and FY26 was a monster year. Revenue around 29,000 crore, up roughly 30%, with profit near 2,700 crore. The third quarter alone saw revenue jump 46%. What really sets Polycab apart is quality. Return on equity around 21%, return on capital near 30%, and almost no debt. On the charts, it's in a healthy uptrend, trading above both its 50 and 200-day averages, with RSI in the neutral to positive 50s, so it's not overheated. Citi's target sits at 10,500. Next, KEI Industries, the compounder. Over 5 years, it's grown profit at a 27% annual clip, and FY26 delivered 11,700 crore in sales with a debt-free balance sheet. Mutual funds hold over 22% of KEI, by far the highest institutional conviction of the three, and it carries a strong AA+ credit rating. Its new Sanand plant in Gujarat is the growth engine to watch. The trade-off is that return ratios are a bit lower than Polycab's, yet you're paying a similar 57 times earnings. Technically, it's firm, holding above its key moving averages. And then there is RR Kabel, the momentum machine. It's the smallest of the three but delivered the biggest punch. FY26 profit exploded 58% higher, and the stock is up around 78% in a year. But technically, RSI above 82 and money flow above 86, both deep in overbought territory. And despite a strong buy consensus, the average analyst price target actually sits about 13% below the current price. Let's put them side by side. Notice they all trade around 55 to 57 times earnings. So valuation isn't what separates them here. What differs is the profile. Polycab wins on scale and return ratios. A 21% ROE and 30% ROC lead the pack. KEI wins on balance sheet cleanliness and institutional backing. And RR Kabel wins on raw growth and momentum, with that standout 78% one-year return. Same price tag on earnings, three very different bets. This chart makes the momentum gap obvious. Over the past year, RR Kabel has roughly doubled the returns of Polycab and KEI. But remember, the biggest mover is also the most stretched. In this sector, the stock that's climbed the fastest is often the one carrying the most correction risk if sentiment turns. Strong returns and high risk tend to travel together. So how do you actually choose? If you want the lowest risk, own the leader play, Polycab is the default. Scale, quality and the deepest pockets to fight new entrants. If you want a debt-free compounder with the smart money alongside you, KEI is the balanced middle path. And if you've got the stomach for volatility and want maximum upside with maximum downside, RR Kabel is the high beta option. The choice depends entirely on your risk appetite. Before you get excited, weigh the shared risks. 1. Valuation. All three are priced for perfection near 55 times earnings, and this sector has a history of sharp deratings on competitive news. 2. Those new entrants. As Ultratech and Adani ramp up, with Ultratech's Bharuch plant due around December 2026, pricing discipline gets tested. And 3. Raw materials. Copper, aluminium and PVC prices have spiked, squeezing margins. Bottom line, three excellent companies, one powerful tailwind, three different risk profiles. Polycab the leader, KEI the compounder, RR Kabel the sprinter. Do your own research and match the stock to your goals. Remember, this is educational analysis, not investment advice. If this breakdown helped, hit like and subscribe for more deep dives like this one. Thanks for watching, and I'll see you in the next video.